if any of you out there are holding variable rate debt and you can get rid of that variable rate debt, you better do it now. This is probably your last best opportunity to do so. If you're going in to a knife fight in fiat money products, stocks, bonds, ETFs, insurance policies, all of that garbage, those are just contracts. And contracts are subject to counterparty risk. What does the Bank for International Settlements tell us is the only financial asset that runs zero counterparty risk? Gold. So this is your bazooka.
While speaking at the annual Jackson Hole Symposium last year, U.S. Federal Reserve Chair Jerome Powell told Americans to prepare for the worst economic conditions, as the central bank would not back down until it achieves its 2% inflation target. Though it's taken over a year, the pain Powell told Americans to expect is about to be fully unloaded on the populace, warns Lynette Zang, a renowned precious metals expert and sound money advocate. During a recent interview with Commodity Culture, the ITM Trading chief market analyst gives a detailed analysis of the current state of the U.S. economy. She describes our current financial system as frail, unstable, and right on the precipice of a nasty collapse. Economists are forecasting a sharp decline in growth beginning from the fourth quarter of 2023 and well into next year. Starting as early as this weekend, the U.S. economy will be facing multiple setbacks, including a potential federal government shutdown, strikes in the U.S. Midwest, and rising energy costs, coupled with the end of pandemic-era fiscal support for student loan repayments and childcare subsidies. According to economists at Goldman Sachs, the combination of all these issues will weigh heavily on consumers and could bring annualized GDP growth down to 1.3% in Q4, compared to Q3's 3.1% growth. Already, consumer spending, which makes up 70% of economic output, has been revised much lower from 1.7 to 0.8% annualized rate. According to Lynette, the U.S. economic system is based on nothing but constantly compounding debt, which is why it appears to be liquid and stable. But every time they print more money, they devalue the dollar and reduce its purchasing power. Plus, it's not just the purchasing power of the dollar that is going down the drain, but also the value of assets denominated in the dollar. According to Lynette, even if the value of assets like equities climbs to $1 million per share, they would only be valuable if the dollar has any value left. So far, we have only a few cents left on a dollar compared to less than 100 years ago. The devaluation is going to continue until the dollar is worthless, and everyone has to take shelter in hard assets like gold and silver. We will now bring you clips from the interview as Lynette discusses our harsh reality and why you need to be significantly invested in physical gold and silver. Ensure you watch the video to the end so you don't miss any vital information. Also, ensure you smash the like button, subscribe to the channel, and turn on post notifications for more videos. Thanks, and enjoy the video.
There's a normalcy bias, right? And like I said, when they created the system, the one thing that there were two things that they knew. They knew many other things, but two key things. Number one, that people marry the legal money of the state. So it's hard for them to imagine that this can't regain some of its value. They're married to it. So if they make the stock markets, the bond markets, those kind of markets, real estate markets look like they're going up in nominal terms, the prices go up, then people think that they can save themselves in those assets. The problem today is that those assets are severely overvalued, and particularly in the product space, like any of your stocks, bonds, ETFs, that kind of thing. You can only convert them back into this garbage. And so 1 trillion times zero is zero, last time I looked. But gold has the broadest base of buyer, and so does physical silver. And physical, not the garbage contracts, right? But the physical, again, it's used in every single sector of the global economy, which means that out of all assets, both gold and silver have the broadest base of demand, and therefore they never go to zero. And they've not been able to figure out how to duplicate some of the qualities in gold and silver in a lab. So if they need those qualities, like in electronics and space travel in the financial system, etc. They can only get that through owning physical gold and silver. The other thing is, once you own it and it's in your possession, essentially it's invisible. You keep anything, and now they're trying to change that, but at this point, that's still true. If you're sitting in any fiat money products, you have a bank account, you have a stock brokerage account, you have an insurance company account, that's all easily visible and therefore easy to take away. Even, I'm sorry to say this, but even gold held inside of IRAs, right? They know you got it. They can determine how they're going to tax you on it. They can easily confiscate it because of the limitations that they put around what you can hold inside of an IRA. Physical gold, physical silver means that you have real money as they're destroying the rest of whatever little bit of purchasing power is left in this and transitioning us into the new system, CBDCs, which is the next, what they like to call innovation in money. Because with this, the public had control. If you did not like what the government was doing, you could go in to any bank with a $20 bill and walk out with an ounce of gold. And that would create restrictions around what the government could do. That's why they had to get rid of the gold in the system. When you're looking at how gold and silver can protect you, this is that warm body of water that the frog has been sitting in, right? If you don't jump out of that pot now and position into your gold and silver, you will not be able to maintain your purchasing power. You will not be able to maintain your lifestyle, because when it happens very rapidly. Wasn't it Ernest Hemingway said, how do you go bankrupt? Well, slowly at first and then fast.
According to Lynette, gold and silver are the only assets that have zero counterparty risks. It's only a matter of time before everyone realizes this, and we begin to price assets in gold instead of the intrinsically worthless US dollar and other fiat currencies. But the custodians of the current global financial system will not go down without a big fight. They will make up with different tactics to delay the inevitable and keep their fraudulent schemes running for longer. The latest suppression tactic, according to Lynette, is the introduction of central bank digital currencies, CBDCs. CBDCs will give governments what they crave above all else: complete control over every aspect of our lives. During the interview, Lynette also addresses the issue of price manipulation, especially for metals like silver, which, unlike gold, has not hit a record high in a long time. Investors are simply tired of waiting for silver to take off, as several precious metals experts have predicted over the past decade. But there is only so much an asset can do when it's up against the full force of a ruthless multi-trillion-dollar industry that has the backing of the government to get away with practically anything. Let's get back to the interview.
Well, my response to that is there's a lot of accuracy in there, but what people are losing sight of is the difference between the paper market, which is all those contracts we've been talking about, which is exactly what that comment is referring to, and the physical markets, where we're seeing premiums way higher than the spot price. But in either case, and I think this is critically important, and it does take a level of nuance in it, but I think it's critically important for people to understand what the true fundamental value of any asset or any instrument is. So how do you know what that is? Because, if you believe Wall Street, then you're just believing the lie. How many times can you be lied to and you don't know the truth? So here's the truth. I really am more about gold as the primary monetary currency. So this is how you get the true value, and then you can attach that to silver. Since money is created from debt, fiat money is created from debt, and gold is hard money, it's good money, is the flip side. You take all the debt that's been created in the world, and that'll give you an indication of how much money has been created. And you divide it by all the gold that exists in the entire world, whether it's above ground, because we can reclaim, we can account for like 98% of it, or it's in ground, right? Let's make this simple. You divide all the debt with all the gold, and that gives you an indication of its true fundamental value, because the most important function, and this is a key in determining the fundamental value of any instrument or asset. What was the single most important function of that asset? For me, in my opinion, you can have a different one, it's to hold the value of your assets over time. Silver, will it go back to the historic ratio? I don't know. Maybe it will, maybe it won't. But what I can tell you is both gold and silver are severely, severely, severely undervalued. And the last time I did the calculation, and it's been a while, and other people may do calculations different than I do, but gold was north of 15,000 an ounce. So with spot at 2,000, 5,000, 10,000, it's a bargain. And silver is the secondary monetary metal. It straddles both worlds in that it is monetary, but it's also industrial. It also gets used up in production. Thinking that these people are gods is a mistake. They are human beings and they are fallible. When will this come to a crashing halt? Well, did we not see, 2020, where SLV, so the silver ETF, changed their prospectus because they couldn't put together enough baskets of physical silver to support their share prices? So when will all of this happen? Because that's what people want to know. Because I don't know, I guess they think they're going to have the ability to see it the day before and get prepared, which is not accurate. When you are going to see this, both gold and silver, move toward their fundamental value will be when all confidence in the system is lost, and we're very, very close to that.
A resolute Federal Reserve, heavily weighed down consumers and households, severely troubled economy, and unending gloomy signs of what's to come. That is the current state of the U.S. economy, the strongest economy in the world. So, one can only imagine the state of weaker economies with far weaker currencies and more troubled markets. Whatever lies ahead in the next quarter and subsequent quarters, having a properly diversified portfolio with adequate gold and silver investments might be the difference between being only slightly affected and losing it all. Please share your thoughts on Lynette's interview in the comments section. Also, ensure you like this video and smash the subscribe button so you never miss any of our videos on gold, silver, and other commodities. Thanks for watching.